Tesla announced a new intended stock split, which has pushed the stock price approximately 35% higher in just the last 2 weeks. What does that mean? Plus, we've got a very interesting opportunity to tell you about that is a key supplier for Tesla. I'm Chase, and you've landed on the MoonShot Money channel. Are you ready? Let's go. If you own Tesla, what do you have to do when the split comes? Nothing. Tesla and your brokerage company will handle everything for you. What does this mean for Tesla? Not much, really. If they do another 5-for-1 split, the price will be divided by 5, so there's no real change to the market capitalization. If you were buying a month or so ago when we were, you've done very, very well, very quickly. Stock splits announcements have a tendency to entice people to buy more shares. When the stock splits, retail investors will buy more because it appears to be cheaper, continuing to drive up the price. We couldn't be much more excited than we are right now to be Tesla investors. We've been in since June of 2017. Just curious, how long have you all been a Tesla investor? Let us know in the comments below. When were you in, and were you earlier than we were? Since the Russia-Ukraine war began, the supply of nickel, a very critical ingredient in EV batteries, has been squeezed. Unfortunately, Russia is one of the biggest nickel producers in the entire world. Elon Musk had the foresight, it seems, though. Tesla has been shoring up their nickel supply vendors since 2021. Bloomberg reported yesterday that Tesla has signed and announced a multi-year agreement with Vale Mining. Elon has been savage on securing the vertical integration aspect of Tesla's supply chain. With new plants opening, increased production, and higher demand, the need for nickel is only increasing. My father mentioned in one of our This Week, Next Week podcast that he had been buying basic material mining stocks. Companies like Rio Tinto and BHP, the two largest material miners. What that he hadn't told me, though, until yesterday was he had been quietly accumulating Vale Mining, ticker symbol VALE. What Tesla has done with nickel is a hidden competitive advantage, said Gene Munster, managing partner of Loop Ventures. Tesla continues to be a couple of steps ahead of the rest. Sanctions against Russia over its invasion have added urgency, since the country holds about 17% of global capacity for refined Class 1 nickel, the type required for EVs. Since the February 24 attack on Ukraine, the price of nickel had climbed 30% through Tuesday on the London Metal Exchange. Prices tripled over 2 days during that period because of a short squeeze. The market could settle down if there are signs that the war will end. Yahoo Finance reported Tesla's deal with Vale is one of the several that the car maker has forged over the last year. In January, the Austin, Texas-based EV manufacturer committed to purchase 75,000 metric tons of nickel concentrate from a Talon Metals Corp project being developed in Minnesota. That followed agreements with BHP Group, who my dad mentioned that he had been buying, the world's biggest mining company for material from Australia. Let's look at Vale as a possible investment here. Their operations cover approximately 30 countries that share the mission to transform natural resources into prosperity and sustainable development. In addition to mining, they work with logistics, railways, ports, terminals, and state-of-the-art infrastructure, energy, and steelmaking. Over the last 3 months, Vale's stock price has risen over 45% and is up over 18% for the last 12 months. Compare that to the S&P 500 ETF VOO, which is down almost 4% over 3 months and up 16% over 12 months. Vale has a trailing 12-month price-to-earnings rotation of 5.75 and a price-to-book of 2.74. Their most recent profit margin is 30.64% and a total debt-to-capital of 33.61%. Here's another reason Mike got excited about Vale. Their annualized dividend yield is a whopping 13.38%. Now, all this is before the secret multi-year agreement with Tesla to buy nickel. Vale is now the largest nickel supplier for Tesla. We fully expect to see the price begin to rise over the next few weeks, and Vale is the most valuable company in Latin America with a market cap of $103 billion. Vale oozes with robust free cash flow and enjoys a management team who has tremendous experience navigating through rough seas of cyclical swings. Did I mention Vale is the world's largest producer of nickel, which is one of the most versatile metals in existence today. With inflation out of control, companies in the commodities industry, especially those that produce iron ore, gold, and nickel, typically offer protection against inflation. Stocks like Vale, Rio Tinto, and BHP are usually resistant to fluctuations that come with inflation and are seen as less volatile, which makes them a great way to diversify our investment portfolio. The story broke just yesterday in the Wall Street Journal that President Joe Biden is considering invoking the Defense Production Act as soon as this week to boost domestic production of minerals used in batteries needed for electric vehicles and other clean energy technology. The administration would include minerals like lithium, nickel and graphite, cobalt and manganese under the Korean-era National Security Mobilization Law. The designation could help mining companies access government funding for feasible studies on mining development, productivity and safety improvements, or on how to wring more of these metals out of or already produced at facilities operating in the United States. Materials mining is a serious business and a piece of the EV story that we don't think much about without lithium, nickel, and more. There would be no EVs. We're going to continue to accumulate these large miners and collect the dividends along the way. So do you own any Vale or any other material miners? Let us know. And if you enjoyed this video, subscribe to our channel and give us a thumbs up down below. Now, this next video gives you 10 reasons that you should buy Tesla stock. So we'll see you in the next one.